Ladies and gentlemen, good day and welcome to the Q3FY22 earnings conference call of Sun Pharmaceutical Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Nimish Desai, Head of Investor Relations. Thank you, and over to you, Mr. Desai.
Thank you. Good evening and a warm welcome to our third quarter FY22 earnings call. I'm Nimish from the Sun Pharma Investor Relations team. We hope you received the Q3 financials and the press release that was sent out earlier in the day. These are also available on our website. We have with us Mr. Dilip Shanghvi, our Managing Director, Mr. Muralidharan, CFO, Mr. Abhay Gandhi, CEO of North America, and Mr. Kirti Ganorkar, CEO of India Business. Today the team will discuss performance highlights, update on strategies, and respond to any questions that you may have. As is usual, for the ease of discussion, we will look at the consolidated financials. And just as a reminder, this call is being recorded and a replay will be available for the next few days. The call transcript will also be put up on our website shortly. The discussion today might include certain forward-looking statements, and this must be viewed in conjunction with the risks that our business faces. You are requested to ask 2 questions in the initial round. If you have any more questions, you are requested to rejoin the queue. I also request all of you to kindly send in your questions that may remain unanswered today. I will now hand over the call to Mr. Shanghvi.
Thank you, Nimish. Welcome and thank you for joining us for this earnings call after the announcement of financial results for the third quarter of FY22. I hope you and your family are doing well. Let me discuss some of the key highlights. Consolidated revenue for the quarter were at rupees 98,142 million, recording a growth of about 11% year-on-year, driven by strong performance across markets. Despite rising costs, we've achieved higher profitability. We continue to focus on top-line growth, operational efficiencies, and business continuity. For Q3, branded formulation business in India and emerging markets together now account for about 50% of global consolidated revenues. Let me now update you on our global specialty business. I am happy to inform you that our global specialty revenue for the first 9 months have already crossed previous full year revenues. For Q3, our global specialty revenues were approximately $183 million across all markets, up about 21% year-on-year. The global specialty revenues do not include Ilumetri end market revenues. As you all are aware, we launched Ilumya in Canada and Winlevi in the US during the quarter. Recently, we also announced launch of Cequa in Canada. Specialty R&D accounted for approximately 22% of our total R&D.
This is the operator, so we are not able to hear you. This is the operator, so we are not able to hear your audio. Please check. Ladies and gentlemen, the line from Mr. Dilip Sangvi has got disconnected. Request you all to please stay online while we reconnect him. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you, sir.
This is Muralidharan, CFO. Sorry, we got disconnected. We are back again. Thank you, Mr. Sangvi. Good evening, everyone, and welcome to all of you. Our Q3 financials are already with you. As usual, we will look at key consolidated financials. We recorded the highest ever quarterly revenues at rupees 98,142 million in Q3, up by about 11% over Q3 last year. Material cost as a percentage of revenues was 27%. Staff costs were up by 8% year on year and stands at 18.9% of revenues. Other expenses up 13% year on year and stands at 28.1% of revenues. Increase is attributed towards higher selling and distribution and traveling expenses, while in Q3 of last year, these expenses were lower on account of global pandemic. As indicated in our past earnings calls, the expenses are seeing an increasing trend across all the markets as we reach full normalization. Forex loss for the quarter was rupees 106 million compared to gain of rupees 716 million for the Q3 last year. EBITDA for Q3 was at rupees 25,574 million, up by 7.5% year on year, with EBITDA margin at 26.1%. It is important to note that we have been able to record EBITDA growth despite a significant increase in other expenses and a negative swing in Forex. Reported net profit for the quarter was at rupees 20,588 million, up 11% over net profit of Q3 last year. The reported EPS for the quarter was rupees 8.60. Let me now discuss the key movements versus Q2 FY22. Our consolidated revenues were up by 3% quarter on quarter at rupees 98,142 million, primarily driven by the specialty business. Material cost stands at 27% of revenues. For Q3, other expenses were at 28.1% of revenues, higher than Q2 on account of higher selling and distribution expenses. We had a Forex loss of rupees 106 million for Q3 as against Forex loss of rupees 764 million in Q2. EBITDA for Q3 stands at rupees 25,574 million, which is flat compared to Q2. It is important to note that in Q2 we had a milestone income of $10 million, excluding which we would have recorded a minor growth in EBITDA sequentially. Other income for Q3 was higher compared to Q2, mainly due to settlement income from DUSA Biofrontera litigation and interest on income tax refund. Reported net profit for Q3 was at rupees 20,588 million, marginally higher than Q2 this year. Now we will discuss the 9-month performance. For the 9-month period, net revenues were at rupees 290,403 million, a growth of 17% over the 9-month period last year. Staff cost stands at 18.6% of revenues, lower than 9 months last year. However, in absolute terms, the staff costs have increased on account of annual merit increases. Other expenses were at 27.3% of revenues, lower than 9-month period last year. However, in absolute terms, the other expenses have increased on account of higher selling, distribution and traveling expenses, while in the 9 months of last year, these expenses are lower on account of pandemic-related restrictions across markets. As a result of the above, the EBITDA for the 9 months was at rupees 78,900 million, a growth of 26.5% over the 9 months last year, with EBITDA margins of 27.2% compared to 25.2% year-on-year. Excluding the exceptional items, adjusted net profit for 9 months FY22 was at rupees 60,851 million, up by about 33% year-on-year. Reported net profit for 9 months FY22 was at rupees 55,500 million. The company has repaid debt of about $254 million in the first 9 months of the current fiscal. As of 31st December 2021, we continue to remain net cash positive even at the ex-Taro level with $767 million of net cash. At consolidated level, including Taro, the company has a net cash of about $2.1 billion. Let me now briefly discuss Taro's performance. Taro posted Q3 FY22 revenues of $139 million, a net profit of $26.3 million, higher by 5% and 6% respectively over Q2 FY22. On year-on-year basis, revenues for Q3 FY22 were flat, while the net profit was lower by about 20%. For 9 months, revenues were at $418 million, up 4% year-on-year, and adjusted net profit was at $99.2 million, down by about 7% year-on-year. I will now hand over to Mr. Kirti Ganorkar, who will share the performance of our India business.
Thank you, Murli. Let me take you through the performance of our India business. For Q3, the formulation revenues in India were rupees 31,676 million, recording a strong growth of about 15% over Q3 last year. India business accounted for about 32% of consolidated revenue for Q3. Despite the challenging and competitive environment, we have maintained the trend of the past few quarters of outperforming the average industry growth, which has led to increase in market share. Our market share has been gradually increasing over the past few quarters. For Q3, it was 8.6% compared to 8.1% in Q2 as per AIOCD AWACS data. On MAT basis, as per AIOCD AWACS data for December 2021, our market share was 8.2%. We have witnessed a growth across most of our therapies. The growth was driven by a combination of factors like improved demand for non-COVID treatments, which led to higher growth in chronic, semi-chronic segment, better patient flow to doctor's clinic, and increased healthcare awareness. As per AIOCD AWACS data for Q3, for some of our key therapy areas like CNS, CVD, and gastro, we outperformed the segment growth. As per the data, our growth in CNS was 7.8% against 7.5% for overall CNS segment. In CVD also, against 3.3% segment growth, our growth was 12%. Also in gastro, the therapy grew by 15.7% against the segment growth of 10.8%. We had a negligible revenues of COVID products in Q3. Field force operations were near to normal in Q3 with almost all doctor clinics operational. The productivity of the new field force, which has started improving, and about 70% of the territories for the new field force are performing as per our expectation, while the performance for the remaining 30% is likely to improve going forward. Travel costs for medical representatives was near to normal, while we continue to see some saving in terms of cost of medical conferences. For Q3, we launched 25 new products in Indian market. Sun Pharma is the largest pharmaceutical company in India, and as per SMSRC report, we are number one ranked by prescription with 11 different doctor categories. We also continue to remain the partner of choice for in-licensing of products, given our strong number one position in many therapy areas, including therapies for the treatment of COVID infection, coupled with our large distribution network. I will now hand over the call to Abhay.
Thank you, Kirti. I will briefly discuss the performance highlights of our U.S. businesses. For Q3, our overall formulation revenues in the U.S. grew by about 6% over Q3 last year to about $397 million. The main driver of growth was the specialty business. U.S. accounted for about 30% of consolidated revenues for the quarter. While doctor clinics are open in the U.S. during the quarter, the situation is yet to fully normalize. Patient flow to doctor clinics as well as frequency of doctor calls by our medical representatives are still both below pre-COVID levels. Our specialty revenues in U.S. have grown over Q3 last year, mainly driven by Ilumya, Cequa, and Levula. Specialty revenues are significantly higher compared to September 2021 quarter, mainly driven by Ilumya, Cequa, Levula, and Absorica. We have done well in the specialty business in U.S. as well as globally over the last few years. Global specialty revenue contribution has doubled from about 7% in FY18 to about 14% in Q3FY22. As you are all aware, we launched Winlevi in the U.S. in November 2021. We have received a good response from doctors for the product, as there is a need in the market for a new mechanism of action to treat acne, which Winlevi is addressing. It is the first time that an androgen inhibitor is being used for treating acne. Our established presence in the dermatology market will help in ramping up Winlevi going forward. For competitive and strategic reasons, we will not be able to share granular details on Winlevi on this call. Let me now update you on our U.S. generics business. While the U.S. generic business continues to be competitive, the Sun ex-Taro generic business has stabilized. While we do experience price erosion, we have been able to counter it by a combination of new launches and better supply chain management. During the quarter, we launched 5 generic products in the U.S. market. We have received approval for generic amphotericin B liposome injection, and we are eligible for 180 days of exclusivity for the product under the competitive generic therapy designation by the US FDA. We will be launching the product shortly in the US. I will now hand over the call back to Mr. Shanghvi.
Thank you, Abhay. I will briefly discuss the performance highlights of our other businesses as well as give you an update on our R&D initiatives. Our branded formulation revenues in emerging markets were at $239 million for third quarter, up by about 17% year-on-year and lower by about 2% over second quarter this year. The underlying growth in constant currency terms were about 15% year-on-year. Emerging markets accounted for about 18% of total revenue for third quarter. Amongst the largest market in local currency terms, Romania has grown by about 25%, Russia by 17%, South Africa by 33%, and Brazil by 29%. Formulation revenues in rest of the world market, excluding the US and emerging markets, were $181 million in the third quarter, up by about 3% over third quarter last year. Rest of the world markets accounted for approximately 14% of consolidated third quarter revenues. API revenues for the third quarter were at 4,710 million, higher by about 5% over third quarter last year and by about 8% over second quarter. We continue to invest in building a R&D pipeline for both the global generics and the specialty businesses. R&D efforts are ongoing for the US, emerging markets, ROW markets, and for India. Consolidated R&D investment for third quarter were at rupees 5,471 million compared to 5,593 million for third quarter last year. Our current generic pipeline for the US market includes 88 ANDAs and 13 NDAs awaiting approval with the US FDA. Lastly, the Board of Directors today declared an interim dividend of rupees 7 per share against rupees 5.5 per share declared last year, keeping distribution percentage of the profit constant. With this, I would like to leave the floor open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. First question is from the line of Neha from Bank of America. Please go ahead.
Yes. Thank you for taking my question. My first question is on the US specialty business. Abhay, if I heard correctly, most of the quarter-on-quarter increase you indicated were from your other products other than Winlevi. So is it fair to assume that the 183 million does not include any large launch quantity sort of supplies, and therefore should not normalize? Is that a fair understanding?
What I understood from whatever I could hear, Neha, is you're asking whether there was an extra large stock up during the launch of Winlevi. Is that the question?
Yes, that's right.
No, I don't think so, because I think what we are seeing today as buying from the wholesalers is almost as per what they are selling out of their warehouses. So it's like so there is no buying that you are seeing at the launch, which we will have to carry forward. No.
Understood. And in terms of Levulan and Absorica, particularly for Levulan, has the momentum improved back to what we were doing pre-COVID levels, particularly given there was a spike in cases again in December? So was there some sort of an impact in December, and therefore we could see more build-up in Levulan as we go ahead?
The number of elective surgeries has clearly come down. So if I look at it from on a 3-year basis, we are nowhere near where we were, say, 2 years ago. So, and that's not because we have lost share. It's mainly because the number of patients who are treated have come down because of new requirements of how many cases you take in a day and can you postpone surgery. So it's definitely not normalized. We see a seasonal uptick in this quarter, which is normal, but the numbers for maybe the last year or even the previous year would be higher.
Understood. And Vinay, I know you don't want to share granular details, but in terms of initial launch, it's fairly early days. Any feedback that you think you would like to highlight? Is it in line with expectations? And also, we got uptick in SG&A. So was that related to Winlevi launch?
So Winlevi launch clearly would have increased our SG&A because during the launch you would have a higher expenditure, that's for sure. See, then, as I said in my readout itself, for competitive reasons, I wouldn't give too many granular details on this call. But the only thing which I will definitely say is that the initial response has not just met, but maybe exceeded expectation. So of the doctors that we covered for the product in the first 3 months, 80% of them have given at least one prescription for Winlevi, which is a very good indicator that the interest level at the customers for a new mode of action is very high. And then, of course, it's for us to be able to use that as a base and increase the depth of prescriptions from these doctors and continue to improve on our launch performance.
Understood. That's helpful. Thank you. Thank you, Dave.
Thanks, Neha.
Thank you. The next question is from the line of Kunal Dhamesha from Emkay Global Financial Services. Please go ahead.
Good evening, and thank you for the opportunity. So just one question on the how we account the specialty phase. Do we kind of account the phase as a pre-coupon rate, or we kind of net out the coupon or any assistance that we provide to customers in our sales number?
So this is accounted as part of net off top line.
Net off of top line. Okay. Because I think as far as I remember, when we had Absorica coupon program, I think that at that time we were accounting the gross sales, and then I think coupon was netted in marketing expense, if I remember it correctly.
No. I do not think so. We have been having policy of accounting towards the coupon.
Okay, sure. And if I look at the second question is on, if I look at the X-Star of P&L, the gross margins are kind of sequentially compressed by roughly 100 basis. So would you ascribe this to geographic mix shift or just the higher raw material prices, or any particular mix of both the items?
So my suggestion would be that we should look at annually instead of quarter. And further, Taro also published the results and given the press release in terms of their results. Then look at that.
Okay. And lastly, if I may please, so we have said our specialty sales are doing well. But would it be fair to say that Ilumya 9-month sales are comfortably above the FY21 level?
Yes, they will be.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi, good evening. Thanks for the opportunity. My question is on R&D. Just trying to understand better. We've been talking about higher R&D and also expected trials to start, further trials for Ilumya, etc. How do we think about it? I mean, if you see the run rate is still about 5.5, under 6. In the past, we have talked about 8%. So how do we expect the year to close, and what's the outlook for the next year, and what kind of trials we're talking about for next year?
No, I think the objective is to spend that kind of money. I think, like what Abhay said, is that some of the challenges in terms of patient recruitment, especially in the kind of studies that we are doing, which are extremely competitive trials where competition for all potential patients to participate in study from multiple companies is very high. So it's kind of leading to a much slower recruitment, and that thereby this. We are making multiple efforts, including diversifying the geography in which we are doing the studies, so that we can spend the intended money. What I think we share with you every year is the plan to spend. I think your assessment as to we are not being able to spend is a fact, but hopefully we should kind of go back to the kind of money that we wanted to spend.
And does that impact, sir, some delay as the trials are getting delayed in terms of the new trials starting and closing and hence the commercialization?
It would have impact, yes. I mean, that's where the effort would be to find a way to minimize that impact.
Okay, thank you. And second one was on the US. So I had a comment that, kind of bottoming out and with the new launches and supply chain improvement, we expect, things are bottoming out and to improve from here. But what we heard from the different other companies also is about that pricing pressure has been continued. In fact, they talked about more, supply chain challenges like freight costs, etc. So, I mean, what is changing for us? Are we seeing a spate of new launches and there's some corrective action being done, or what exactly gives us confidence on the base business ex-Taro for the US?
Typically, in a quarter, we have been able to launch close to 5 or 6 products each quarter. That's one thing which helps us. And of course, we have been consistently saying on every single call in the past few years, actually, that pricing pressure, which is product specific, we continue to face. But then we have to be able to overcome that with launch of new products, which we have been able to, and better supply chain management. So these are the only 2 tools which can help us stabilize our business and find a way to grow in a competitive market.
Okay. So we expecting launch date to improve, or what is exactly changing?
The launch rate may not improve. I mean, we are very clear on what are the products we have in our R&D portfolio, when are we supposed to launch them. And I think the visibility I have as of now, going ahead, is also we should be, don't look at it as each quarter, but average for each quarter should be in the same range of anywhere from 5 to 6 products.
Okay, great. Thank you.
Thank you.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah. Thank you. Good evening to all. One question is on the US specialty business. So this 183 run rate, would you say, Abhay, that this new base on which you can grow even in the March quarter? I'm asking because I remember last year in December we had some stocking benefits, and March quarter number was much lower than the December quarter. Would you say that was just one of last year? This is not the case this time?
It's a combination of not just 1 or 2 products, but we also need to see how in Q3 the overall Absorica franchise contributes or does not. But the whole idea is, when we run the business, we don't look at it on a quarter-on-quarter basis necessarily. We look at long term, do we have headroom to grow, and what do we need to do to continuously grow on each of our franchises. And I think the way I look at it, each business has opportunities to grow their own franchise and their own product. So rather than answer it as a next quarter question, I would look at enough headroom for the businesses to grow their own franchises.
But just a clarity on that, like you mentioned that Levulan typically has a seasonality which is peaks out in December quarter, but any other product?
A little bit spills over to Jan Feb. A little bit spills over to Jan and Feb also. So it's typically in the winter months, which goes up to at least February, where you see a seasonal impact on a lot of derm products, not just Levulan, but even acne. There is a seasonal impact.
So, but other than the derm product, the other portfolio normally does not see any spike in the numbers in the December quarter.
Not as prominent, of course. Not as prominently.
Sure. Second question is on the other expenses. So, as Murali sir was saying that we have seen increase across business.
Sorry, I'm not able to. I have a sort of a mechanical sound when you are speaking, so I'm not very sure I'm catching your question.
Yes, this second question is outside the US. That's on the overall company. This is on other expenses. This question is that, as in the initial commentary was mentioned, that we have seen increase in other expenses across the business segment. But just trying to understand how far away or close we are to the normalized level of the company. Like we've been talking about pre-COVID, we are at a certain level. We will not go back to the pre-COVID level, but how close we are to that number? Are we very close? Because we've seen a, let's say, surprising increase sequentially, which we were not expecting. But are we very much close to that normalized numbers now?
So, Anubhav, the thing is that, as I said in my read-out, that yes, we have been guiding the future as market operations normalize, so which we have witnessed. But more important is that the product mix and the job mix also helped us to maintain the margin despite the cost pressure increase. However, having said that, we are having a close watch on that so that we can contain and maintain the momentum of the growth on the EBITDA.
Sorry, there was some disturbance. So net, what's the response? Are we closer to the normalized level, or are we still far away from that?
So they go up slightly higher than the current level, but not anything significant.
Okay, sure. Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Yeah, hi, thanks. Good evening, everyone. About just on the US specialty business, when do you expect the footfalls, in the doctor clinic to, sort of normalize to pre-COVID level? And which products are getting impacted because of that? I guess it's Levulan and Ilumya. Anything else?
So first of all, the first question, I really cannot guess, Sameer, because even today, I saw the morning news, the average 7-day cases are still like 500,000. So that's not small. So footfalls at the doctor's levels, are restricted, and clearly access to reps also much lower than pre-COVID. When will it stabilize? Your guess is as good as mine, so I don't know. And if I look at it very broadly, even though every single product does get impacted, only the extent of one over the other really changes. Electives are the worst hit, but really speaking, the impact is on all products.
Okay, so it's quite commendable that despite lower activity, you are able to grow your specialty so well. No?
Thank you. I will definitely communicate your comment to my team members. It's nice of you to say that. But the way I look at it, and I guess this is true for everybody. When you have a level playing field, it impacts everybody. So that way, you are not disadvantaged over anyone else. So it's a common scenario for everybody. I think it's all a question about how you execute in a changed environment as a team and as a company, which eventually makes a difference.
Okay, great. And the second question is on Winlevi. I know you won't give any specific details, but you did not cite Winlevi as one of the specialty products that drove quarter-on-quarter growth. So was Winlevi not an important contributor? Because your prescription trends in IQVIA shows a pretty good traction over there.
If you recall, we launched the product only on the 1st of November. So we didn't have the full quarter, that's one. Secondly, I think November and December are also many days of holidays. So the real impact of Winlevi sales will not be seen in Q3. Some of it may actually be seen in Q4.
Okay, just final one on Winlevi, that was quite helpful. Is what's the typical duration of of treatment if the patient is using Winlevi. In the sense, is it a chronic use? There's an argument for a lot of repeat uses or no?
Too soon for me to really give you a quick handle on that, because one tube is supposed to be used by a patient for a month, and then even if it is not used, the patient is supposed to discard that and use the next one. Whether that is really happening, whether this product, unlike an Absorica, for example, doesn't have a REMS program. So the patient may or may not visit the doctor every month. So what kind of prescribing and adherence behavior is being demonstrated? We are also trying to understand more, and I don't think I have a very accurate answer for you, Samir. But it's a great question, something that I am also trying to get an accurate answer to.
Sorry, I'll just take 1 second more. So Abhay, this is helpful, but I guess what I'm trying to say is, fine, real life situation is different. We don't know what's going on. But just medically speaking, scientifically speaking, what do you think would be a typical duration? I know it varies from patient to patient, but on an average, is it a 3-month treatment cycle, 6-month treatment cycle? Just any range would work,
I don't know, Samir, so I don't want to give you an answer which I cannot back it up with scientific data, because even today I'm not 100% clear in my own mind whether this has been used in a majority of patients as a first-line monotherapy or in combination with existing therapies. So, and therefore, if you're used as a sort of a combination therapy with other products, then what the doctor decides to continue, what the doctor decides to maybe stop or wean away from. These are the questions in our ad boards we try and get answers to. As of now, the information is so sketchy. If I give you a sort of a clear answer on this, I may be misleading you.
Samir, I think if it's helpful, then Winlevi, like most of the acne products, the clinical trial is a 12-week trial, and the primary endpoint is reduction in the severity of acne. Now, along with that, all products also have to do a 12-month safety study in certain subset of patients. So my sense is that depending on the severity of patient and the type of acne that they suffer from, the duration of treatment will be different. So I think the challenge is to understand what is the percentage of severe, moderate or mild acne patients and how doctors treat them. So if it's helpful.
Yes, absolutely, Dilbhai. Very helpful. I've got a few more. I'll get back in the queue. Thank you so much.
Thank you.
Thank you. Next question is from the line of Krish Mehta from Enam Holdings. Please go ahead.
Yeah, thank you for taking my question and congratulations on a great set of numbers. I had 2 questions. The first of which is on the psoriatic arthritis trial. Could you provide any update on how you're seeing footfalls for enrollment, or how we are progressing on that front?
So when I explained about the relative challenge in terms of recruitment of patients, psoriatic arthritis, one such trial. So we are not on schedule, and we are trying to find a way by which we can catch up by multiple strategies.
Okay. And my second question was actually on the R&D front. So as we've seen that the quarterly spends have gone down as a percentage, and you explained that it's due to the lower footfalls. But assuming that the footfalls normalize after a few quarters, how do you see R&D going forward in terms of building a steady state increase in organic R&D versus more of, acquisitions or partnerships that we saw with Winlevi? So what's the strategy in terms of R&D going forward?
I think our sense is that the steady state R&D should be around 8-9%. Because like we have this SCD-044 study in phase 2. After the phase 2 is complete, we will then have to enroll subjects for phase 3, and that will be much more expensive than phase 2. So like that, there are potential indications that will keep on increasing the cost going forward.
Okay, thank you so much.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Markets. Please go ahead.
Hi, thank you for the opportunity. My question is on specialty spend. So with pickup in all the key brands, how should we see costs moving ahead? And are you near to cost break-even for your specialty portfolio?
Murali, you will refer to the cost, or should I?
No, generally I think, Abhay, we haven't been sharing segment-wise profitability and costs. But in the past, I think we have indicated that we are in an investment phase in this business. And I think depending on how the clinical trial costs continue and how we capture the clinical trial costs, it will require significant investments going forward. But I think overall, I'm happy with the margins that we've been able to improve in the whole business.
Okay, just to clarify, on the clinical trial part, obviously it depends on progress in the pipeline asset. But have you optimized costs more on the marketing and promotional part for the key brands?
So with that, you need to respond.
Yeah. I think for most of the major products, we are clear of what is it that is required for us to succeed and getting stable expenses. But for a new product like Winlevi, of course, there will be disproportionate investment going in.
Thank you. My second question is on your capital allocation strategies. Where are you looking to invest mostly, say for next 1 or 2 years?
So I think philosophically as a company, we've always looked at our preference for investing in businesses or creating businesses with ability to grow steadily year after year. And I think that philosophy will continue to drive our future investment.
Okay. Can you call out what are your capex plan for FY22 and 23?
No, I think this year we haven't given any specific guidance, but in the past I think we've indicated that our major capex plan has been kind of complete till our volumes go up significantly. So till that point of time, I think we will have marginal new capex in all businesses, all facilities.
Sure. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, just on the US generics ex Taro, if you could share what kind of price erosion you're experiencing on the base portfolio?
We look at it on a product-to-product basis. It's never on a portfolio. And each product has a different kind of scenario. Like, I think in the last call, Mr. Sangvi also mentioned that it's not a basket. There are some products on which we face pricing pressure. On some products, we are able to take a small price increase as well. So net, we always say that there is pricing pressure. But obviously, we wouldn't give a number to saying that we have this percentage of price erosion on the base business.
Okay, because if like what that net number is and the kind of launches we have and the kind of base at which currently we are. Like if I normalize the 3Q US generics ex Taro sales, then we are more or less at a $1 billion kind of a number. So going forward, will the new launches be able to offset the price erosion is what I'm trying to understand.
I mean, that will be our attempt.
Okay. And just on the Ilumya per se, like the conditions of mild to severe psoriasis and the psoriatic arthritis are quite often related, and the peer having now approval for both the indications. So you see the change in the way the doctors look at, like, let's say Ilumya and the peer products, or you see still continuing prescription rate on a single indication?
In a way, Mr. Shangri has answered this question in response to a question asked on this call earlier, that not having the indication does have an impact, clearly. And that's why we are trying to speed up our trial so that we are not disadvantaged versus the peer products.
I'm so sorry, I missed that. So sorry.
No problem.
Thanks.
I hope this helps you. Yeah, thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thank you for taking my question. So, this amphotericin B CGT exclusivity, what you have got. So, how bigger is this opportunity that you think? Because it's an old product and discontinued by many, but the prescription progression and all that, if you can see, then it looks like a larger product than that is looking like. And is it a kind of a rightly timed product approval that we can see, considering the COVID trend that is what we are witnessing in the US?
I don't know what information you have that it's a discontinued product, because that's not my understanding. Now, it's the only approved generic, and because it is a difficult product for which no generic was approved, the FDA by a separate direction said that the first approved generic will get 6-month exclusivity once it is approved, is launched within 75 days. So we should be able to launch this shortly. It's an interesting product. It's not a very large product, but the sales as well as the growth of the product are in public domain, so you should be able to see that. And at the same point of time, I think in the US it has never been used for COVID. So because this mucormycosis, the problem that we faced in India, it is not a problem faced by any patient in other geographies. So it's not been used for COVID.
Sure. So secondly, can you split the R&D spend between the specialty and the normal generics?
I think it was part of my readout, 23%.
Oh, sorry. Yeah, okay. I missed that. And just ask one question. So is the price erosion trend for the Taro portfolio is meaningfully different than the non-Taro portfolio? You commented, obviously, it is the price erosion cannot be portfolio based, but...
No, also we can't share any information about Taro beyond what they have shared.
Sure, sir. Fine. Thank you, sir. Wish you all the best.
No, thank you.
Thank you. The next question is from the line of Samir Baisiwala from Morgan Stanley. Please go ahead.
Hi, thanks for the repeat. Just a couple of things. Is there any update on Halol reinspection?
No, I think we haven't heard back. I think last time also I said that, is that we've requested them for inspecting the facility, and we are yet to get any indication as to when they will be inspecting, and so hopefully soon is our expectation.
Sir, is it hurting our business a fair bit in terms of not getting new approvals, especially some complex products?
I believe so, because it would be affecting our business and growth.
So one final one. For other income, 430 crores, I don't know if you have given the breakup or if there are any one-offs in this.
We have given the breakup in the readout I just said, Samir.
Oh, I missed that.
It's a settlement income for DUSA Biofrontera of $22.5 million and interest on income tax refund.
Yeah, but how much is the income tax refund?
So that we have not disclosed, but the Biofrontera settlement amount $22.5 million is disclosed.
Okay. Okay, that's fine. Yeah. Thank you.
Thank you. The next question is from the line of Ritesh Rathod from Nippon India AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Can you give some quantitative color on the India outperformance in terms of we had done MR addition, we have launched number of products. So how much increased has been on the doctor coverage? How effective has been this product launches in last 12 months?
Sure. Yeah. I think India business, as all 3 quarters, has done well. I think we are doing well in India business is a combination of a lot of things. One is whatever strategies we thought during this financial has worked well. The team has executed all the strategies, and the team is also performing above the expectation in most of the territories. We are also focusing on building brands. So that's also working in the right direction. As far as the prescription is concerned, we are already leading into 11 doctor categories where we are number 1. And the new product launch momentum has also gone up substantially in last 2-3 quarters, which is also helping us to grow the business. As I said in my readout, we have expanded 2 years back, and that has also worked well for us. Almost 70% of the territories are meeting our expectation, and what we are seeing is that the remaining 30%, how they will improve their performance in next 1 or 2 years. So India business performance is a combination of all of these things which are working well, and we are getting market share from quarter 1 to quarter 2 to quarter 3. So in quarter 3 we have almost reached market share of 8.6%. That's the highest in the recent times.
Yeah, thank you. On the second question on the derma sales force in US, from when you will leverage the existing sales force, MR, or would you set up a separate thing for that?
We have a separate field force for Winlevi and Absorica franchise.
So would there be an opportunity for cross leveraging, or you would be deploying Absorica field force and basically there won't be any incremental cost?
So there was an existing Absorica field force, and we expanded that to be able to meet the requirement for the Winlevi launch.
Okay. Thank you. That's nice.
Thank you.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yes, thank you. One question to Murali sir is on the accounting for the specialty sales. I think you mentioned on the coupons that you report sales net of coupons, but what are the royalties? For example, Ilumya that you pay to Merck or Winlevi that you pay to the partner, where is the royalty component shown?
The royalty expenses are expensed out paid.
Sorry, can you say that again?
Royalty payments are expensed out payment.
So that will be captured in other expenses?
Correct. Other expenses.
Okay, thank you. And second question is to Abhay. On the Ilumya, just want to understand, that for this product, roughly, Medicare and Medicaid put together will be what percentage of the product? I'm not interested in the exact number, but will it be less than 50%, more than 50%, some indication?
I'm sorry, what is the question? Your voice is not medical one?
Of Ilumya revenues, how big is Medicare and Medicaid put together?
It is a significant portion, but I would not be able to give you an exact percentage, but it's meaningful.
So I was trying to say, will it be more than half or less than half? So when you say meaningful,
I really don't want to get into that granular detail because what you're asking me the question of strategy and that information may hurt us.
Okay, thank you.
Thank you. The next question is from the line of Anubhav from MC Research. Please go ahead.
Hello. Yeah, hi. A couple of questions on specialty. One, could you share views on competitive landscape for Absorica as such, and what could be the market share now? Is it still around 7%?
So all our forms of Absorica, the original brand, LD, and the authorized generic put together, we are more or less maintaining the market share we had earlier. I think marginal bit, but more or less there.
Okay, that's great. And secondly, last quarter you mentioned that for Levulan there was some supply chain issue. If you can just mention what was the issue, it was more from the supply or raw material side kind of or distribution side. And is that issue, are we over with that issue?
So more to do with the quality testing, which is outsourced, and because of COVID, they had their own issues. But this quarter has been much better, and I think next quarter we'll be able to improve further.
Okay, that's quite helpful. Thanks a lot.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura Securities. Please go ahead.
Yes, sir. Good evening. Sir, on emerging markets, in your initial comments, you mentioned some strong growth across markets, and we have seen that traction in the recent past. Sir, can you provide some color? What is driving? Is there a COVID-related element there? And how sustainable the growth in the emerging markets that you're seeing?
I think a large part of our emerging market business is branded generic business, and they are all based on generation of prescriptions. So there is a certain amount of consistency and continuity in that business. Now, I don't have that level of granular understanding of different markets, that whether the markets are positively impacted because of the what you call COVID or not. Generally, in most of the geographies that I am familiar with, COVID has a negative impact on overall business. And we don't have a large portfolio of COVID-specific products in emerging market. So, and also if you see over last few years, emerging market has been consistently growing year after year. So hopefully we should be able to maintain that continued growth.
Okay. No, sir, I was saying because, despite COVID, we are seeing, good growth in those markets. So, sir, are you, in terms of strategy, are you looking at own development products or partnerships? Is it new products or market share gain in existing products? Broadly speaking, I know it may be, different for different geographies, but any broad trend that is there driving the growth?
So actually, I think it will be both the increased share of business and new product. What I think the business has made up in spite of significant erosion in currency of some of the key geographies, say like Russia, South Africa, Brazil, which are important geographies, which have seen significant erosion in the value of their local currency. So if we actually adjust for or at a constant currency, actually every year emerging market has grown at double digit.
Okay. So just one question on capital allocation, because your cash generation is quite strong. So, you have been investing in specialty quite a lot as you were building it out. At the same time, what kind of opportunities you're seeing, let's say in branded business in India, emerging markets, or even in US generics? I mean, given all the pressures that are there in these markets, do you think there is a possibility of opportunities beyond specialty? And if there are, would it make sense for Sun to sort of pursue such acquisitions, especially meaningful ones?
No, I think in the past we have indicated that we are continuing to look at specialty assets, either existing products or products close to market, or existing businesses where we believe that we can add value and the product business is of strategic long-term importance for the company. So that philosophy continues to be the same, is that we want to find a way to put our capital to use whereby it can help us grow profitably year after year. Challenge for us has been to be able to get businesses which we believe that will help us. Hopefully, I think we should be able to break this what you call drought of potential acquisitions that we've seen in last few years in next maybe 1 or 2 years.
Okay, sir, that's helpful. And so last question, if I can, that specialty number, is it possible to break up between US and non-US, or any color in terms of growth that you want to give between US and non-US geographies?
So we are sharing the global specialty revenues for competitive reasons. We would like to stick to our current disclosure.
Okay. Thank you, sir.
Yeah, thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Nimish Desai for closing comments.
Thank you, everybody, for taking time out to join this call. If any of your questions have remained unanswered, please do send them across. We will have them answered. Thank you and have a good day.
Thank you. Ladies and gentlemen, on behalf of Sun Pharmaceutical Industries Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.